The main difference between QQQ and ONEQ lies in their performance. Over the past decade, QQQ has posted a return of 6.60%, slightly higher than ONEQ's 6.36%. This translates to an annual return of 18.10% for QQQ, compared to ONEQ's 16.2%. As a result, an investment of $10,000 would yield a return of 17.25% with QQQ, whereas ONEQ would yield 15.5%. In terms of diversification, QQQ has around 100 holdings, with a primary focus on technology, whereas ONEQ has approximately 2,500 holdings across various sectors, including healthcare, technology, and consumer discretionary. This diversification often helps reduce risks, as the more holdings an exchange-traded fund (ETF) has, the lower its risk. Consequently, ONEQ may be preferred by investors seeking lower risk. The expense ratio for ONEQ is currently 0.21%, slightly higher than QQQ's 0.20%. Although this difference may seem minimal, it can accumulate into a significant margin difference in the long term, especially for larger investments. Thus, in terms of fees, QQQ offers a cheaper option. Despite their differences, QQQ and ONEQ share some similarities. Both are passive ETFs, implying they are not actively managed and follow a market index. They also use the same leverage and are high volume, making them less likely to be affected by slippage. Ultimately, the choice between QQQ and ONEQ depends on an investor's risk appetite and investment goals. Both are high-performing ETFs that offer low costs and diversity. If an investor seeks higher returns and lower fees, QQQ may be the preferred choice. However, if they prioritize a more diverse and stable investment with lower risk, ONEQ may be more suitable. It is essential to note that the information provided is accurate as of the current date and is